I'm Kevin Stewart, talking today with JP Gervais, FCC's Chief Agricultural Economist. JP, you and I have talked a lot in the past about agriculture's importance to the economy. Let's talk in this segment for a little bit about food processing specifically and how important it is to the overall agri-food supply chain.
Well, I'm glad you asked, Kevin. We have 260,000 Canadians employed in the food and beverage manufacturing sector. If you look at the sector, it accounts for 2% of the total Canadian GDP. So it's a very important sector to the overall Canadian economy. And everybody stands to gain from a healthy food manufacturing sector, from farm input suppliers to producers to retailers and to consumers. So we have a lot at stake here when we think of the food processing sector.
When I think about agriculture, we talk a lot about foreign and emerging markets being real opportunity places for agriculture. Is it necessarily the case that food manufacturers also should be targeting those same emerging markets?
I think so. If you look at the growth in foreign markets, you're looking at, I think one of the big drivers is the emergence of this global middle class. A lot has been said about the global growth in world population. The fact that probably between now and the next 40 years we're going to have 2 billion more people on Earth, which is a huge challenge in terms of being able to feed this entire additional population. But if you look at the purchasing power that will be concentrated in the Asia Pacific region, that's a major driver where growth is likely to be for the food processing sector. So, going back to, let's say, 2009, 2010, we had 1.8 billion people that were part of this global middle class. Now, 2020, we expect this to be at 3.3 billion people. So that's a huge shift in terms of purchasing power. And also, as I said, it's coming from Asia Pacific. As before, 28% of that global middle class was coming from the Asia Pacific region. It's expected by 2020 to be coming from 50% of that global middle class will be coming from that region. So it's a major shift in terms of purchasing power in the world. And I think, Canadian businesses can target that part of the world.
So if you were to give me an opinion, so we have two things here. It's sort of the commodity versus value add thing. So what, in your opinion, is it the growing population that'll have bigger opportunities, or is it the growing standard of living in emerging countries that'll provide bigger opportunities?
I believe both, but I certainly think that the growing standard of living, this expansion of the middle class, is going to be the major factor. As I said, a huge challenge to be able to feed the increase in population. But if you look at what are the markets out there that will turn out to yield benefits for Canadian businesses, I think that's the expansion of the middle class and the fact that income is going to grow significantly in the emerging parts of the world.
So your opinion then on some of these developing countries, what are the opportunities that you think are going to be worth a hard second look?
Well, certainly I think historically when you see income grow, we've seen a shift in food preferences. Consumers relying more on an animal protein-based diet. And so I would expect the same thing. And indeed, if you look at China, for example, we've seen consumption of pork meat grow quite a bit. Beef is the same thing. I mean, you can't compare beef and pork consumption in China. By far, Chinese consumers prefer pork to beef. But nevertheless, if you're looking at growth in the two markets, beef is even growing at a higher pace than pork. It's growing off a lower base in terms of consumption, but nevertheless, there's really a lot of growth there because it's seen as a luxury product. So I think meat would be one area of particular growth in world markets.
Gotcha. Okay, you're a food processor. Your business model has operated in a North American market for 3 decades, okay? So let's talk about risk for this processor. Do you face a greater risk continuing to focus your business where you've made money before in North America, or do you face more risk embracing some of these volatile emerging opportunities?
I think you face a bit more risk just focusing on the domestic market. And it all depends on your scale as well. But if you look at trade balances between Canada and the entire world, right? We had a trade surplus with the United States 10 years back, meaning that we were selling more in the United States market than we were bringing in Canada from the United States. And just talking about food manufacturing here. And that trade surplus from 10 years ago, which was around $2 billion, actually now you're looking at last year's data, we have a trade deficit of $1 billion. So there's no doubt that going from a surplus to a deficit was partly driven by the increase in the value of the Canadian dollar, which made U.S. businesses more competitive in our own market, and also Canadian businesses less competitive in the U.S. market. But I don't think it's the entire story. I think there's more to it. Now that we've seen the Canadian dollar going back to 90 cents, that's going to be good for Canadian businesses. My advice, though, is don't get too comfortable there. I think still long-term, the fundamentals are still pointing towards a higher dollar. So just by looking at your Canadian market, I think you're facing more and more competition. So just to look beyond the Canadian border, I think, is a good strategy. Same thing with the rest of the world. If you put aside the United States and you look at our trade balance with, for food manufacturing with the rest of the world, we also went from a small deficit of 10 years ago to a very big deficit right now, $5 billion worth of deficit. We import more than we sell in these markets. It's not all negative. That's the one point I want to say, because you can look at these numbers and think, well, I stand no chance of competing against these businesses. That's not the case. We've been able to grow our exports to these markets, the emerging markets. It's just that these markets have grown at a faster pace than our own market. And so, one of two things need to happen here. So either we fight for market share in the Canadian market, which I think is a reasonable strategy, or we also say, well, we want to get a piece of the pie that's growing in foreign markets. And going back to your question about risk, I think there's a bigger risk of just saying, we're going to stand still and fight for domestic market here than also looking at other options in foreign markets.
JP, appreciate it.
Well, thank you so much.